Hi, welcome back to Arizona Lifestyle with Holly Waxman, and I've got two special guests here, Ryan Nelson, my favorite lender,
Hello.
and Britney Waxman, my favorite and only daughter with 72 sold.
Hello.
Hi, you look pretty in purple today, Britney.
Thank you, Mom. I got this shirt from you.
You both have some purple on, just two different shades.
It wasn't from your closet this time, but you gave it to me, so that was sweet.
Yes. I thought it was really very pretty. No wonder I like it. So it does look good on you.
Thank you.
You're welcome. So before we started today, we were just thinking about some of our real estate situations we are getting into. And it seems like today we have quite a few properties that our sellers are pre-foreclosure on. And Brittany and we're negotiating because we really need to get offers. Brittany had walked in here and said, we've got some people that we need an offer on today. So we asked Ryan that question, and his first response was, we need to get a title report. And
Well, definitely. I mean, Brittany expressed that they have some different liens and judgments on against them and potentially against the property. So you need to know what you're dealing with so you have a full picture on what responsibilities and what sort of obligations need to be paid by the seller when they sell that home so a new buyer can take over and buy that property.
Right.
so
I never knew there could be different type of liens besides mortgage liens on properties or HOA liens. Now I'm realizing that people could put liens on homes and credit cards could.
There's contractor liens, there's tax liens, there's different types of things that can be attached to a property depending upon, what's taken place in the past. So
Yeah.
these are great topics for first-time home buyers, because when you're buying a home for the first time, there's all sorts of different parts of the real estate transaction, or people that even are buying another home, all
Right.
sorts of different parts of the transaction. So it's really important to come to a seasoned realtor and a great team to help you negotiate the whole transaction. But
Yeah.
another great part of what we do is that we have our hands on different properties and we're helping people. And then on the other hand, we could help the buyers who are ready for a different type of transition and transaction to get the best buy and home that's great for their needs. That being said, let's talk about the market. Where are we at with
Well, today was a big day. Today was the Federal Reserve 2-day meeting. And on the second day, they always do it on a Tuesday and Wednesday, but they announced that they're going to keep interest rates steady and not increase them today. So this is the second out of the last 3 meetings that they've left rates steady, their federal funds rate. And they did signal that they do anticipate potentially one more interest rate hike this year and up to 2 more next year, which they'd already stated in the past. So it wasn't really any new news. I think the market overwhelmingly figured that they were going to keep things steady based upon the different economic reports that have come out, that measure inflation, which is what the Federal Reserve's mission is to keep inflation in check, keep it, and their ultimate goal is to have inflation be no more than 2%. And we saw it as high as 9% during COVID times, which really started to propel the rate increases that started happening about 18 months ago. And we're seeing inflation slowing. Now, does that mean that we're going to get down to that 2% number anytime soon? It doesn't, but we're seeing the rate of inflation actually slow, which is a positive. But in regards to rates coming down soon, probably not anytime soon, probably not literally until the end of next year to 2025. So it's going to be a while. And, that's got a lot of people wondering, should I buy a house now with rates being as high as they are? And the one thing I will tell you that I tell all buyers is, the worst case scenario, if you want to buy a home right now, the worst case scenario is you buy that home and interest rates actually go up higher. Mm-hmm. And then you're able to call me and thank me that, hey, you got into the home now and you've got an interest rate that's below what the current rate is.
right?
That's the worst case. And the best case scenario is you actually are able to buy that home now and marry that home. And as rates start to come down, there will be an opportunity to have lower payments than you currently have because you can refinance that loan. And all conventional and FHA, VA mortgages that are done today, there's no prepayment penalties at any time. You can easily refinance that when the market has lower rates and save money. So your worst case is rates go higher and you're glad that you got into the home now, and your best case is you'll save money long term. So, what's going to happen if you're on the sidelines looking to purchase a home? If you wait to buy that home until rates come down, the one thing that's almost a guaranteed certainty is that you'll be able to buy that home with a lower rate, but you're going to pay a higher price for that home than you are today.
Exactly.
You're going to pay a higher price. And why is that? Well, as rates get lower, more buyers can afford to buy. And all those same buyers that have that logic in their head about wanting to wait to buy till interest rates are lower, they're going to be jumping off the sidelines to also purchase, and that's going to propel homes to a higher price than they are today. So if you can't afford to buy right now, then that's the question. Affordability is tough. We're not going to sugarcoat that. It is tough because rates are higher, but you are going to get a price on the home. If rates do come down, that home's going to be worth more. You're going to be building equity and long-term wealth.
Definitely. And like Susie, what Brittany and I were just saying is we're seeing sellers that really need to sell. They're in financial strain. They need to scale down because they have health conditions. And so there's really great deals on the market right now where sellers really do need to sell. And then with Brittany's and I's skill set, we're able to, again, get seller concessions where the seller even pays to buy down the rate, which can, even though it might be higher, we can bring it down lower.
Absolutely.
So that's really a great thing. And it's a wonderful investment, and it's you need a place to live that's safe and secure, and you can create continued memories with your family and friends. And
there's also the tax benefits as well of owning a home, which is really dramatic. And it's
and specifically in Arizona, our taxes are so cheap compared to a lot of other places around the country.
Like Chicago.
Yeah, very, very, very affordable. And rent prices are not doing anyone any favors either. I mean, the inflation is real. Rents are probably almost double what you could have rented a home for 5-6 years ago. So even though buying a home, your payment may be a little higher than what rent is currently, you own that home, you're going to build long-term wealth, and that money is going in your pocket instead of paying 100% interest on renting and paying someone else's mortgage. It's always better to pay your own.
Exactly. And even if it's an investment, you could do some different ways of possibly advantages on taxes. And if it's your own home, if you have a home office in the home, there could be tax benefits. Definitely talk to your CPA. But there's so many more better reasons to own your own home if you can than to rent. And there's different, what's the least expensive you can go down? Is it 3 or?
Well, FHA is 3.5% down. And if you're a first-time home buyer, then you're looking at 3% down on a conventional loan. And if you're a veteran and have VA eligibility, it's 0% down.
That's amazing.
So no down payment at all. And you talk about an investment. And, someone brought up a question to me the other day and said, hey, I really would like to buy a property as an investment. However, I keep hearing that you need to have a lot of money to put down. Mm-hmm. And if you do an investment loan, Freddie and Fannie are going to require at least 15% down. The reality is you have to put down 20, and you get a better interest rate if you put down 25%. But, one of the ways that you can avoid having to put so much money down and buy a property as an investment, and I personally did this for my daughter a few years ago. We bought a property together that she lives in, and we didn't buy this as an investment per se. We bought it for her to have her own home, but I co-signed with her on the mortgage. And what a lot of people don't realize is that's a great way to actually acquire an investment property with not a lot of money out of pocket. So, we call it a hack, if you will, but it's legal. And if you have the knowledge, take advantage of it. So the way that it works is if you're going to buy a property, it's about occupancy. And if someone's going to live in that property for the next 12 months as an owner occupied, which is what you're signing up for when you get a mortgage. Okay, they're going to ask you, what's your intent of acquiring this property? Is it a property that's going to be a primary residence? Is it going to be a second home, or is it going to be an investment? And second home and investments are very expensive. Freddie and Fannie changed their guidelines about 18 months ago in regards to second homes to make them the exact same cost as an investment property. So it's expensive. If you buy a property as an investment or a second home, you're going to have to put down at least 20%. Preferred is 25 because you have less costs, but you have higher interest rates and a lot more fees in addition to a large down payment. But what you can do if you want to acquire and a property as a long-term investment is find someone who will live in that home legitimately as a primary residence for the next 12 months. And in my instance, in the example with my daughter, she didn't make enough money to qualify, so I co-signed with her. So I own that property with her. And my agreement with her is we did this kind of as a business transaction, if you will. And it was an investment for me, but it's also a great opportunity for her because the actual payment and rates at the time were a lot lower than they are today, but it sure beat the heck out of renting, and she actually has a roommate that pays half of the payment now. So her, to rent her property, which is a small condo in Mesa, it's a 2-bedroom, 2-bath, it'd be about $1,800 a month, and her mortgage payment's $1,400, and she only pays half of that. So she has a roommate paying the other half. But from a financing perspective, how do you acquire an investment property if you don't have a ton of capital? You don't have that 20%. And that could be a large amount of money. So on $300,000, you're talking about $60,000. Well, if someone is willing to live in that property as a primary residence, you can co-sign with them if they don't qualify on their own and have them live in that property for the next 12 months as a primary. After that 12-month period is over, and that statutory period is agreed upon where you've agreed when you sign that note and deed of trust, you're going to occupy that property as the said occupancy type, then you can legally rent it out as an investment long term. And that way, it allows you to buy an investment property with the minimum down payment that a primary residence requires. So not only can you get in for FHA is 3.5% down, and with a non-occupying co-borrow on conventional, it's 5% down. So very minimal, not nearly as much cash out of pocket, but you can actually acquire an investment property legally that way. After 12 months, you can rent it out. And it's a great way to do that. In addition, you get primary residence interest rates and a lot less money down. So you're going to get better loan terms, a lot less money out of pocket, and it's a great way to acquire a rental. And a lot of people, have done that over the years where they'll buy a primary residence, then they'll live in it for a while, and then they want, life changes, right? Family size grows. You want a new house, you want something newer, but you don't want to sell that existing home. You want to build wealth through investing in real estate and keep that property long term. And, they'll go ahead and rent that property out. You can use the rental income for qualifying for the next property that you're going to buy, which oftentimes will offset the existing mortgage payment and go and buy your next property with, again, very little money out of pocket. So a great way to, invest in real estate, and you just have to have some creativity. But buying a property as an investment doesn't have to be just conventional thinking. It doesn't have to be you have to have an enormous amount of money and put down 20% to acquire that as a rental. All kinds of opportunities to do that way. Definitely encourage parents as you have kids that are in high school. Start teaching them financial literacy, teach them the responsibility, and the most important thing is have them get some credit opened up when they are young. Teach them, financial education so that they know how important credit is for their future and long term and buying just about anything. And, the importance of having a great credit score. And even if they don't have enough money to buy it on their own, being a non-occupying co-borrower on a loan and a mortgage for someone, you don't have to live in that house with them. You can do that, and it's completely by the book. And you can be a non-occupying co-borrower, and being a co-borrower on an actual mortgage for somebody else doesn't mean you have to live in the property. And it also doesn't mean it's a lifelong commitment for that person that's actually co-signing for someone else. Once someone has an opportunity to make enough money, they can always refinance that loan into their name. So my daughter, for instance, once she makes more money, she's very young, she's 21. The intent is for her to be able to just have this property for hers and not, have me involved. I simply was there to help her get into the home, which I happily did. I love my daughter to death, but she was living with me prior at the time. And, I kind of wanted her to be out on her own. So I didn't kick her out, but it was a great opportunity for us to go in together to start investing in real estate. And my agreement with her is, hey, I'm going to co-sign with you. I'm going to put down the down payment. Okay. We put down 5%. And I said, someday when we go to sell this property, you can have the equity. You make all the payments. I just want my down payment back. Is that a deal? And she said, absolutely. That's a great deal. So, and the property, since we bought it, I think we paid $253,000. It's easily worth $300,000 now. So someday she's going to have some nice, a nest egg set aside. She's 21 years old and she's building wealth through real estate. So great opportunities out there. And there is a lot of creative ways to buy things without just looking at what a normal guideline is and thinking, wow, I got to put down a lot of money to buy an investment or invest in real estate. Not the case. Or a common thing that I hear from people is, well, I own a home, but I can't qualify for another one. Well, you may or may not, but look at the numbers, and what most consumers don't realize is if you do not own a home and you want to buy another one and you decide to keep that property and you're going to rent it out, you can use that rent that you're going to be receiving on a future lease to help offset that existing mortgage payment. So you have more income than you think if you want to buy another property and you currently own one.
Amazing. I mean, a good friend of mine has taught me about buckets when you're making wealth. You can have some stocks, you can have some real estate, you can have mutual funds.
Right.
And the combination of the different vehicles really helps to build wealth and oversee bonds. And I think it's wonderful that you've done that for your daughter, and she's so lucky. And so it's teaching your daughter by example.
Absolutely. It was a great move. And I couldn't be more thrilled for her to see her being so young. She's been awesome. I've never had, luckily, she did things, right growing up. She had really good credit. She had a credit card she got when she was 18, had good long-standing history on it, never paid anything late. In fact, her credit score was higher than mine when we went to do the loan. It was like 783 and I was like a 760 something. So I was like, wow, and I have not had to ask her one time to make sure that she made that mortgage payment. And I think we've owned that going on 2 years now. So
that's great.
It's turnkey. And again, the amount she pays per month at $700 compared to if she was on her own, she'd be paying $1,800 plus to rent a property.
No brainer.
Because she has a roommate and they're paying half the rent now. So it's one of the smartest things you can do. So as a parent, and for those listening out there, got to start talking to your kids the minute that they turn 18, have them get some credit, teach them how important it is to make sure you always pay your payments on time, and it will open up a lot of avenues and windows, for the future for them to invest and do a lot of other things where I feel bad for a lot of people that don't have that early on in their early years because they don't understand how important that is. And then when they want to buy a home and they've got collections and just late payments, which a lot of times I see just such silly things, a credit card that's got a $300 balance with a $20 monthly payment and there's lates on it. And it's like, man, you missed that payment. And what that did to your credit score is so impactful, and you can't even buy a home because you're not even at the minimum credit score required. You don't have to have perfect credit, but the most important thing is just knowing where you're at all times, knowing where your credit score is, and making sure that you're on top of that so that when the opportunity comes to buy something, you are buyer ready.
Right. It's always great. Ryan's a great wealth of information for Brittany and I and for other people in the community because he's right there. What he says, he does. He'll help you pull your credit. He'll help advise you. He'll look at everybody as an individual and make you be able to do what what your goal is.
Right.
And Brittany, for a young lady like yourself, how does it feel, living, in a condo and being able to help pay the mortgage and such? I mean,
I think it feels like, not only am I gaining wealth, but I'm gaining some confidence and some good energy from it, because I feel like so many other people are not as intelligent or didn't have those types of, people in their life to inspire them in different ways. Cause, some people, of course, like back in the day, and, if you say 20 years ago, if I was living as a 23-year-old girl, not maybe a little longer than 20 years ago, I'd probably say like 40, 30 years ago, you needed a husband to get a home, right? It was unacceptable for a woman at the time by herself to just say, oh yeah, I'm going to buy a home by myself. It's like a ratio that would ever happen 30, 40 years ago was pretty slim to none. Now it's like,
it's good.
now if you don't buy a home as a single woman and then you just go do it because you have a husband now, it's like, wow, you missed that big opportunity that you could have had when you were single and gotten to know only who you are as the person you are inside, but also who you want to be in your own independence in the financial industry. Like, what do you want for yourself? Not only is when you come together with a husband, but when you are with yourself, what kind of nest egg do you want to have for you and your family? That's just in case fund or a shopping fund or something, whatever it has to be as you get into that next step into marriage or with a partner or something.
It's a good point. So, Brittany, can you update us at what you're seeing in the market these days with real estate and clients? And
today, it's kind of different. Today, it's just been, I think these past couple of weeks, it's been a lot of people just telling me, I get calls sometimes anywhere from like 6 to 10 p.m. at night. I'm so scared. The date's coming soon for foreclosure. 90 days is almost up, because here in the state, after you get a certified letter in the mail saying, hey, you can't make your payments anymore, you're in pre-foreclosure, you have only 90 days in the state of Arizona to sell your home. And those 90 days, of course, for families who have children and dogs and a life and a home, that's really serious. And of course, that's like it breaks your heart every time someone calls you and says, I'm so nervous about this. And like, you only want to help, especially with our hearts here, right? So it's just been a lot of situations like that. So of course, all of that, it comes to really serious intent. So,
working a lot of long hours and
a lot of long hours till 10, 11 o'clock at night, started at 6 a.m. sometimes, but of course, this is different stages of the market, different stages of life. You can tell me in a week from now or 2 weeks from now, it could be totally different, which is so fun with real estate in this industry. But right now, it's definitely a lot of
people that really need to sell. And if you're thinking of buying, it's a great time to buy. And even if you're not having those type of situations, it's a good time to sell, because there's not a lot of houses on the market. And we always have people like from Chicago or other cities moving here. And another exciting thing from our little business is with 72 Sold, we've become nationwide, and Keller Williams has taken on some of our marketing systems, and Brittany and I have expanded to Chicago. Mm-hmm. So we have some zip codes and territory in Chicago, and we've been reaching out to agents and training them, and it's really exciting to be able to see the successful 8-day program with 72 Sold, for us to see it in Chicago and how it's working there as well, and how many people are connected from Arizona and Chicago. It blows my mind.
You're doing great out there. You're out there for a little bit of time, and
yeah, it was fun.
Yeah.
Yeah, there's opportunity everywhere in the real estate world. Everybody's situation is different. All individual situations, whether you're just buying a home for the first time, whether you're, having a financial hardship. But certainly, we've got the team behind us, with Holly and myself and some of our title partners. We can definitely help you, figure out what's going to be in your best interest and what the right thing to do, and use our knowledge to help you, and guide yourself so that you're really setting yourself up for not only the best solution short term but long term. And you mentioned you've got some clients going through foreclosure, and That doesn't mean you can't buy another home. There's some
Right.
statutory timeframes on, the minimum timeframes that you need to be able to purchase a home after you, have maybe, some sort of credit fatality. That's what I call it if you have a foreclosure. But, that's what's so awesome about the real estate market and talking to people on a regular basis is there's so much opportunity there. There's opportunity where people will sell a home to someone and actually be the bank on the home. They'll seller finance that home where you don't even have to get a traditional mortgage. Typically in those types of situations, they'll want a little more money down, but certainly someone that's going through a hardship, it's a temporary thing. Doesn't mean you're going to go through a hardship for the rest of your life. Something happened and, there's things that aren't going for you, well for you now, but people bounce back. Your situation will change. And there's always going to be opportunities to get you into a home. Even if you don't have the credit even right now traditionally to buy, there's ways to get you into a home, working with the seller directly to maybe assume their mortgage or looking to have the seller carry that mortgage note for you. And not a lot of people think outside the box for, people that need those types of situations. But, as people get more educated, all of those are very viable options for people.
Absolutely. And we do that a lot.
Right.
And some great other homes we were working at is some in retirement communities and master plan communities, which are just beautiful. And people are just relocating because of work or, family matters. But we still love that too. There's golf courses and shopping really close, community centers, gated communities. And also, a lot of people have different communities where they meet all their friends, whether it's a retirement community, if you're,
Of age.
of age. We have wonderful communities like that as well.
Right.
Well, anyways, please feel free to reach out to us, 602-388-0319. We'd love to talk with you, see your individual situation. If you ever have any questions, please reach out to us. Thank you so much for joining, and we'll talk to you again next week. Bye for now.